Then going on to, I don't even know where to start with this one. You're gonna have to break it down for me. Proteomics. What the hell is that?
Proteomics, yeah. So typically,
okay, yeah. See, I didn't even say it right. Proteomics.
proteomics.
There we go. There we go.
Amazing. Proteomics is basically the study of proteins. So, if you heard me speak before, heard me write, like on Twitter and things like that, I'm not a huge fan of small molecules. So, what small molecule drugs do is that they typically try to inhibit a protein, and so I actually used an analogy today. If we have a car and the car has to get from point A to point B, and if the car reaches point B, we have this inflammation process going on. How do we stop the car from getting from point A to point B? What a small molecule does is probably induces like a flat tire. And that could be one approach to stop the car from getting from point A to B. And so maybe you stop inflammation that way. Maybe you shatter the headlights and the car can't see in front of them and they can't get from point A to point B. Another approach, for example, we take a bat and we swing it at the windshield. Now the windshield's cracked. How the hell is the driver going to see how to get from point A to point B? That's what small molecules do. They sort of inhibit a protein. Like if you think of the vehicle as the protein, going to its target destination, they inhibit the protein, but it's not that accurate. Like it's sort of hit or miss. And it also I would probably guesstimate that you can use it for like 20% of the broad indications that you like to use it for. And so proteomics is the study of proteins. So if we can figure out like different proteins we've never discovered before through the use of protein sequencing, we can target more organs. So maybe we eventually find a cure for Alzheimer's. So then getting to that.
So hold on, we got to pause here. So there's not only gene sequencing, and we talked about RNA and mRNA, but we also have protein sequencing.
Protein sequencing, exactly. So we're trying to uncover this proteome of we have so many proteins in our body that we don't even know what all of them do. Like most of them we probably haven't even discovered yet. And so we're trying to discover like all these proteins that we can use as targets for therapeutics. So I hit on this earlier, protein degraders, that instead of like sort of inhibiting a protein, like we said, like you would slash a wheel of a car to stop it from getting from point A to point B. You basically just take the car to you impound it to a junkyard and you just crush the car and you just totally crush the car and you recycle it. That's exactly what happens with protein degraders. They latch onto a protein and they send it to the junkyard inside of the body to go get recycled. And that's called the proteome. So that's what protein degraders do. And they can be used for a variety of different things. So like things from inflammation, autoimmune disorders, cancer, you name it. Like we could probably hit all of those someday.
So
I hope.
With that, what companies are leading in this space? Because this is all new to me. I just remember you saying it and I was like, oh boy, I got to ask him about this. So what are some companies that can I invest in? Are they all private? Is there anyone who's leading this space that's a public company?
Right. There's probably a ton of private companies, but a couple of public companies I like are SomaLogic, QuantumSci, and Jonathan Rothberg. So the tickers are CMII for SomaLogic. The ticker is QSI, QSci.
I saw that on Twitter a lot. QSI, so that must be a fan.
And so they're like the first company that's actually going to go in and try to be like the Intellia of the protein world and try to sequence proteins. Whether they'll be successful or not, there's a lot of debate. It's a risky investment, but it could be a big investment. It could be the Intellia of the future if we figure out how to harness the proteome. That's really cool stuff. As far as protein degraders, my go-to is Glue. I really like them, GLUE. There's some other companies, KYMR Therapeutics, tickers KYMR.
On that one, I feel like I've seen commercials for the KYMR drug. Is that?
Maybe you're thinking of Humira.
And folks, funny. That's why we have experts on here.
I'm no expert.
I get to ask the questions.
Yeah, and then there's a few others. Another one is CCC, so there's C4 Therapeutics, the ticker CCCC. There's just a ton. And if they follow you and I on Twitter, which I'm sure most of the people watching do, a ton of information out there for people to go and do their
I
own
mean, I'd
research.
love to get him on our show to do interviews, and I know you got a couple coming up. It just seems like our next digital revolution. I've seen this from several investors say, if you had to rank what are going to be the future best investments and really the innovation that's going to change our world, the genome and gene sequencing in this world in healthcare, I think we can all agree that in general, healthcare could be improved. So there's a lot of great investments to be had if you have the patience and the stomach for the volatility.
But patience is the number one key. A lot of people don't have it. They say they have it and they don't.
And I would also say too, if you're not smart as you and really dive in and do the due diligence, right? And really live and breathe the research, because you have to stay up, just like technology, where I take more interest in and comfort level as far as my area of expertise and what I spend time doing research on. A basket approach may be a better way to go about this.
For sure. And I even do a basket approach myself. For sure.
So in that sense, would it be fair to say, after looking at what institutional investors are investing in, and maybe from the science perspective, who's well respected, that you could actually take a little bit of CRISPR, a little bit of base editing, a little bit of proteomics, and all these different things, to then it only takes one to really have a moonshot that changes your investment capital, if it takes off.
Right. There's a few ways to do it. You can invest in a fund like ARK or XBI.
Probably the easiest way, ARKG.
Probably
right?
the easiest way.
Cathie
for
Wood
sure.
is definitely for genomics, and is
Mama
definitely
Cathie, we love her.
Yeah, we love her. I mean, she has pushed this to the front of the media, in front of the news, that this is important and that it will be impactful for all of us. So
I'll always appreciate her, because I spent a lot of years studying CRISPR, and I used to talk about it with my family members, my friends, and nobody was paying attention. Like, nobody cared. And then Cathie Wood came on the scene, and I believe this was just even a couple of years ago. I think it was like, I don't know, 2000, maybe 2020, that she really started to gain some momentum, and she really put CRISPR on the scene. And it felt lonely for a lot of years. Like, I kind of doubted myself. Like, what did I invest in? My stocks didn't move for years. I invested in 2017, and sort of like I always had my gut instinct was like, this is going to be something someday, but I didn't truly know. But Cathie had the presence of mind to invest in CRISPR, so I'll always appreciate her for that. She really she put it on the stage for people to see.
And I think that hits on a good point. When you look at investing and what we want in investors, we want our conviction to be stronger. We want other experts in the field like yourself to say, yes, this is a good one. This works. This is, I believe in this, right? But I think there's also a double-edged sword to that in the FinTwit community, and of course the media, because everyone has their own agenda, that you do have to do your own homework. Right? You can't fake conviction. You can't buy conviction.
What do we call it? Borrowing conviction sometimes?
Yeah. Or at that point, what I say is you're gambling like a lotto ticket, right? At the end of the day, you're betting that player is going to hit the three-pointer at the buzzer and you're going to win, and you're going to win the bet. But if you did your homework and you researched the team and who was the better team and the players and this situation and everything else, you're going to have a higher conviction that he's going to hit that three-pointer. And I look at that way with stocks, of doing the homework and really feeling like I'm okay if I lose here, because I feel confident I've done the right research. I've listened to experts, I like the CEO. I believe in what they're trying to accomplish. I mean, this is also something that I can get behind, because this enables us to have a better future to live in. And I always look for that in what companies I invest in, right? I want it to be something that I'm passionate about, and that provides a better world for us.
There's nothing worse than, you probably know this, is like nothing worse than going down on a stock from borrowed conviction. Like, you can live with yourself if you put in the time and the effort and, and all the reading and research, and the stock goes down 20%, you can live with yourself, like you tried your best. If you borrow that conviction and the stock goes down so-and-so percent, you feel miserable, there's no feeling one of the worst feelings in investing, at least.
No, that's probably a good segue for our final piece here. Is SEMA4. They announced earnings today. So for anyone who follows myself, Tony O'Hyan, part of our Pounding the Table group, one of our co-CEOs, know that almost everyone here on the team, we all have a little bit or a lot of SEMA4, and it's my fifth biggest position. And so we can kind of talk about, I'm sure a lot of shareholders in the FinSwip community want to know what people think about today's call, the results. The stock sold off over 20% today. So I'll maybe just give my synopsis and feel free to join in.
Yeah, for sure.
The thesis is not broken. I think that's the first thing you got to think about when you look at big drop-offs in a day, right? I know, Fiverr reported earnings earlier this month, and they dropped 25%. And so you got to ask yourself, when these companies, these high growth companies, fall off like that, is the thesis broken? That's the first thing you got to look at, right? Don't pay attention to the media. Don't look at what everyone's saying. And so I don't think this thesis is broken at all. I'll say that first. It's a founder-led company, and Eric Schott, one of the most well-respected, if not the most well-respected scientists in this field in gene editing, and he's worked at Merck, and he's worked at PacBio, and he's worked at Mount Sinai, taken their genomics department in Mount Sinai from 31st to 3rd overall in the country, and then that became spun off into SEMA4. They had revenue growth of 56% year over year. So when you look at any company, you're like, yes, 56% year over year. That's stout. That's great, right? I think where the investors and the market penalized the company was it was below what estimates were, right? People want to see their instant gratification, and you also want to see a company hit whatever they say they're going to hit, right? There is a level of commitment when you say you're going to execute. The other piece was there was a lot of cash burn in a lot of different areas.
Yeah.
So the first thing you got to ask yourself is, why was there cash burn? I'd maybe like to hear you speak on that, on cash burn, because all of these segments and companies we talked about are going to deal with cash burn and heavy amounts of it in this type of area. Can you explain maybe a good cash burn and a bad cash burn that you would not be so happy as a shareholder to see?
Right. So SEMA4 is a little bit out of my wheelhouse. So they're more like a software company, I would say, right? But they are tied into genomics, but their platform is a software company, right? So I can't speak to exactly how I would like for cash to be used and how I would like it for it to be deployed. Right.
In genomics.
So it's really important. One of the main, it's very simple, but to make money, you have to spend money, right? And everybody knows that, you can't be stingy with if you have high aspirations, you have to spend money. And what does that mean? To spend money on employees, on top tier employees, not just any employee, research and development. And, it also matters, where are you spinning out of? Like, this is out of New York City, one of the best hospitals in the world. So you want to attract top talent. And so if I'm not seeing cash burn, it sort of makes me feel like, okay, what is going on? What are you even pursuing in the first place? Like, what is your end goal? What is your end game? I need to see cash burn, but I need to see it done appropriately. And so from the outside looking in, because I don't own SEMA4, my problem is not with the cash burn at all. It's more so I would like to see them, hit target revenues year over year, like, things like that. But cash burn is not one of those things they're not necessarily a pre-revenue company. They have revenues. It's just, they're not that big. And so
no, I think you're spot on it. And that goes back to the impatience of Mr. Market and how volatile it can be, especially for companies that, let's remind our viewers, those who are new to investing and even those who are old to investing, 2020 was an unheard of year of results, right? We're going through a pandemic, and through it all, more money had flown into the stock market than ever before, and outrageous returns. It's not normal for a company to have a double or a triple within a year, right? Typically, unless there's a big catalyst, right? But we were seeing companies 4x, 5x, you know, there was some really astronomical returns, and that's not something to always expect. There's in fact times where you have to have the patience like you did with CRISPR, and Tony did with Tesla, where it had to base for 5-6 years, and then Tesla went all the way up, right? And so going back to SEMA4, I wanted to hear a little more explanation on the revenue spend, or not hitting the target really, actually. But when I dug into where the money was being spent, it was stock-based compensation. So when you look at the partnerships they've had, the 160 PhDs and 1,000 full-time employees now they've ramped up in no time, and the new facility in Stanford, that all takes money, right? And to your point,
so what you're saying is like location and top tier talent. Yeah.
yes,
right?
Location, top tier talent, top tier facilities. That's going to be a little rough at front, but
Right.
they have no debt. They have no debt,
Wow.
and they also have $536 million after the IPO, plus with the cash they made, to still play with for mergers and acquisitions. And I'm very excited to see what they do with that money.
Right.
I think that does go back to, as an investor, what are you going to do with that money? Is it going to be well spent into something that furthers your aspirations, or is it going to be spent on a bad acquisition that ends up hurting you for a couple of years?
Well, I do want to add that there's probably like a learning curve, right, with Centrellis. So, you know, you explained to me earlier that there was a patient where the instance was the patient had some grade 3, grade 4 tumor, for example, right? And so if you're a patient, you don't right away think, hey, SEMA4, right? These patients, there's a learning curve. We're in the very early stages of precision medicine. Like precision medicine doesn't really exist yet. It's just an idea. Like we're still growing it. We're at the base right now, and we have to build a solid platform to build on top of. And what part of that is just that learning curve. So patients don't know what SEMA4 is right now, and they're still going to be learning. And so for that example, where the patient has a grade 3 or grade 4 tumor, they have to go on Google and they're checking all their options. Like, okay, like my last resort, who do I go to? Where do I go? How can I get help? And so Centrellis is bringing that. It's just a matter of teaching people, hey, this exists. A lot of people don't know that this exists. And so I would love for you to kind of explain, like, what does Centrellis do, and how can we leverage that for instances such as cancer and tumors?
Sure. So let's talk about that use case, because that was probably one of my favorite parts of the call. Similar to Palantir and other companies I invest in, I want to see use cases. I want make it feel real for me, right? And why I would invest. And so the lady, the patient, had a grade 4 tumor, and with that was running out of options. And literally, like you said, found SEMA4, reached out, hey, you can take my genome, you can look at everything you want. I want this cancer to go away. And they were able to find a biomarker on there to precisely look at that and realize it was actually a stage 3 tumor. And with the right medicine attention to that, they could shrink it and slow its growth to nothing. And so they were able to shrink it 85% in size, and they estimate 5 to 10 more years easy with like quality of life, if not longer. That's exactly what we want to see with precision medicine, right?
Right.
So you can look at balance sheets, you can look at revenue, you can look at margins, what they're pursuing in their pursuit. And Eric closed the call, the CEO closed the call with this, is that this has never been done before. There's going to be bumps in the road. And you also, if you're going to invest in us, this is a long-term investment and also a solution to a broken healthcare system. So their goal is to create precision healthcare that lowers the cost for the patient, that's more effective for the patient, that has a better synergy with the life cycle of the healthcare process, with insurance payers, doctors, the data that goes in and tracking a patient. They have over 30 million patients within these 4 partnerships that they now have. 12 million of those are already through their process, and they're tracking that data, and they are using that to really figure out how to redefine precision, or really redefine that the healthcare process and create a precision medical healthcare system where we're able to follow the patient's normal visits to their doctor, and their genome is sequenced, supported by the insurance payer, that yes, Aetna or Blue Cross Blue Shield will pay for that. And say, I've asked that. I went to the doctor and I was like, so can I have my genome sequenced?
No way.
He laughed at me and he was like, not unless there's a good reason to, because it costs too much for us.
Well, the amazing thing is one day we probably will be able to, because
yes,
the best medicine is preventative medicine, 100%.
Yes. And that's also what, you look at the mission statement, you look at what the company stands for. They said patient first healthcare. And what that means to me, and what Eric said on that, is effective healthcare, preventative healthcare,
right, 100%.
And lower cost healthcare. So yeah, did it suck that my fifth biggest holding went down 20% a day? Yeah, but guess what? I'm not selling. I have a long-term hold for this for decades. And so what I will be following for is, when you say you're going to hit a target, you get closer to it. But more importantly, he ended the call too with one of the analysts said, what should we be paying attention to with these partnerships? With, should we be looking at revenues yet? What's the indicator that you're doing what you're set out to do? And he said, patient data growth. And
good answer.
Right there,
amazing
I was
answer.
like, you know what? I'm okay with that, because that's what in order for AI to work as effectively as possible, you have to have as much data as possible. You have to have the right compute, and you have to have less false positives and more accuracy. And so their data growth in patient overall data grew 85% year over year. And for all my data nerds out there, really quick, and I'll let you jump in here, they have 42 petabytes of data.
Dom had to teach me. Dom had to teach me what the hell that is, because I've never heard of that in my life. I never went over I don't know what's past a terabyte.
You got terabytes, you got petabytes, you got exabytes. I mean, it gets really big. And I might even have said that in the wrong order, so forgive me for all my data nerds, but it's a lot. And they are growing their data. They said 1.3 petabytes per month. Overall, in a year, they're growing their data reservoir about 25-30% year over year. So it's only going to get better as long as they keep getting patients willing to offer up that data, and then they make it usable. So
Dom, is it fair to say that in that scenario, that instance with the stage 3 or stage 4 tumor, that data is now fed into their system, and now we can use it for any other patient worldwide who's using the SEMA4 platform? Is that fair to say? Is that how they operate?
Yes. Awesome. With Centrellis, that's exactly, they use Centrellis to find that biomarker. And the whole point of having all these patients within these different healthcare systems is that they're using this moving forward, and they can then help have better preventative healthcare for these situations moving forward to lower costs. Another reason why we need the human genome to be as cost effective as possible, so everyone can get that done, right?
Sounds like a flywheel to me.
It's exactly what he said. See, and you didn't even listen to the earnings call yet. No. He said, all of this and what we're working with in the data growth and these 4 partnerships, we will hit our target at 500 million by 2023. But we're more concerned about figuring out what the flywheel process is within the healthcare system, with working with insurance payers, patients, doctors, physicians. Like, what does this look like to fix this process? It's not going to happen overnight. And
the beautiful thing is that they probably are processing so much data, but part of that data is how much of that preventative care worked. And so they can show that, you can show that, hey, the insurance companies, you should be partnering with us, because this is going to save you money, and we're going to profit, and you're going to profit. And they have all this data to use and to leverage. So, it's just a no-brainer to me, even if there's cash burn right now.
Yeah, and you hit it right there, was the data growth, and we all know that data is currency. So if you got 41 petabytes and you're growing at 1.3 petabytes, you have a lot of currency that's coming your way. Right. So I was saddened, but I'm actually really encouraged the fact that I saw 85% year-over-year growth. You're telling me that's what we need to measure you by. So you're growing. That's like hitting your revenue or your margins 85% year over year. You have 56% year over year growth on revenue. And you gave us your mission on what you're trying to achieve. And now I know how to measure you. And I know the problem you're tackling has a massive TAM, and it's not going to happen overnight. So as a shareholder, I sit I wait. You know, it's so cheap. It's hard not to buy more. But, you know, I want to see another quarter to see, you know, I guess I'll end with this too of, I also learned a valuable lesson. You don't have to get into a company pre-IPO to be successful, or you have to get within the first year. I got so excited and I bought it at $13, $14, $15 a share. And I kept adding. Now, for the long term, will that matter? Not really, as far as buying higher. But there is a cost basis factor in that. So when it dropped at $9 a share, I'm just like, I didn't have to buy it when it was pre-SPAC at 10 or higher. You know, I'll reference one of the best FinTwit investors I know out there, Brian Feroldi, says, I don't have to invest in the first year. I need you to show that you can execute and prove what you're saying you're going to do. Prove it, and then I'll buy. But I think they're fine. I think they'll do great. So for all you SEMA4 holders, don't freak out. You know, if you're a trader, I don't know. I'm not a trader, so I can't tell you about all the swing trades and this dip and that, but the thesis is intact.
Right. It's exactly what you want to hear from a growth company. And I've seen my fair share of dips in my portfolio of 30, 40, 50%. It's happened with Intelia, but look, like, you know, Intelia dipped from 28 to 20 or whatever. So, you know, like looking back, it's just a blip on the chart, especially if you have conviction. People would die to get Intelia at 40, 50, 60, 70, that, you know, like, it's not something to worry about, you know, like 20%, but what's 20% of what 20% could be in 10 years, you know?
I always like to bring up some of the greatest companies that we've seen of our time. And one of those is Amazon. And if you look at how many times it went down 30, 40, even 90% at one point, did you earn the conviction or did you borrow it? That's the question. So I know we went a lot longer than 30 minutes. We'll probably cut this up into different 15-minute chunks so everyone can kind of take notes and digest it. Any lasting thoughts just on genomics and investing in general? Where can people follow you? Where can they get your Substack? You're officially, let's make sure that everyone knows, he is officially a part of our team. He's part of the pound. Yeah, he's part of the pounding table team. He's our genomics guy. We like to call him Nomics Nat. So where can people learn more from you and get some of the content you're putting out?
Yeah, first and foremost, I'm pretty active on Twitter. I like to, you know, put all my initial information there. I like to do what I call them so-and-so for 5-year-olds or so-and-so for a 10-year-old. So I like to explain difficult concepts at a very, very basic level so that people can sort of digest the information. And from there, I have a Substack where I sort of do like a deeper dive. And so if people are interested, I have the link in my bio. So you can join my Substack. And I basically go and I do deep dives, not just on my favorite companies, but very promising companies for the future. And I'm also really excited that we have a few interviews coming up. So I'll be having interviews with the co-founder of Hyperfine, with the CEO of Ginkgo, and the CEO of Lineage Therapeutics. So I'm really excited for that. A lot of interesting stuff coming up, and that'll all be accessible on the YouTube channel. So a lot to look forward to. I'm really excited.
Yeah. If you have not checked out our YouTube channel, which is where this will be, maybe you just came across it in your YouTube feed, Pounding the Table, Investing for Stocks podcast. And we really appreciate everyone's time. I think you're not going to be disappointed with seeing all the different things that we've put in this interview and taking notes and looking up these companies. Do your own due diligence, earn the right to pound the table and earn your own conviction. That's what we want you guys to do. That's why we do what we do, to put this content out there. And we'll see you soon.